Start in a minuto. Give people a minute to join. We're going to talk psychology. Testing, testing. Make sure you can hear me. Awesome. Das ist gut, ja. What am I looking for here? Yeah, I just my logo's covering the chat. Maybe I don't. I'm a total noob tuber, man. We're gonna get started, but let's go here. Cut the tunes. Okay. All right. All right. Let's get rolling here. Thanks for joining, dude. Today we're just gonna go over some prop firm psychology, review a little bit of Bitcoin, maybe some altcoins, and then take questions from anyone if you guys want to ask. Um, but here, let's go over Bitcoin real fast. Been watching this range since the beginning of the month, and we're kind of projected either a red month for September or a nothing burger. And currently we are getting a nothing burger, kind of as suspected when. So I've got this fib here pulled from the range that we've got from January or June of this year to August, and we're sitting literally right at equilibrium, 111,000. And so it's kind of, at least my approach to the markets is, you know, you don't just trade any time, any day of the week, any week of the year, no, week of the month. Is you want to look for very specific times to engage with price, and then you want to look for price to either be in a discount if you're looking for longs and a premium if you're looking for shorts. So an example, we'll zoom in real fast, as I got a daily fair value gap drawn here on Bitcoin, as well as the order block here. So when we're moving down, we're expecting up close candles to act as resistance to up close candles before making new lows. That's what happened here. The midpoint of this gap was respected on a closing basis for the daily candles, and we had lower prices. Made another gap on the way down before we made lowered lows. And now look what happens here once we get into an equilibrium. We got a fair value gap that formed, got traded into, and then here's the 1st of September. We go down, we take the lows, close bullishly. We use this bullish order block to propel ourselves to and through the gap, stopping right at equilibrium again. And then we chop around here and we're consolidating gamblers on either side of the market. So we've got equal highs right here, and we color that red for sell right below this fair value gap in a premium. And then we've also got kind of the stop losses under this bull flag. Then I'm going to color that blue for buy. The buy low, sell high. And so we've kind of got bait on either side of the market. And so this is a low probability that we don't really, this is, I mean, 90% of trading is sitting on your hands. So knowing when to sit on your hands and do nothing is key. And that's what we're doing right now. I'm looking for, in the middle 2 weeks of September, 104,000 for Bitcoin, which is also coincides with this discount zone between the 70 and the 78% retracement. Once again, coloring it blue for buy. That's just how my brain works. So we've got kind of the confluence of a discounted fib retracement within the range, a price array on the daily, uh, and stop losses below this last bullish structure that paid people. So if they didn't take profits and they're holding for 250K and they move their stops to even, or they have their stops below the flag, they'll be next on the chopping block before for us to stop out and then move higher. So, something like that would be what I'd be looking for September. So kind of a nothing burger closing, maybe around here. give us a red candle for then um, October to come up here and take out the highs and start moving upward again, and then give us a bullish Q4. So it's the general idea. Either way, I'm not playing that. So let's talk about. I'm gonna switch over here and let's go to the Nasdaq. And I'll look at all my fancy little lines. See if we can clean this up. And we will look at what we've got going here. Check chat, see if you got anything. So let's check out what price action did today. I'm going to show you the play that I made. I posted the fast forwarded version on my channel, so you guys can check that out if you want the TLDR. But let's look at what 930 did in relation to prices. So I had this high marked, and I'm just holding shift and to draw horizontal lines. So we had equal highs here, and I was looking before open. I went ahead and I entered right here, 923, 922 is when I entered. On this 1 minute gap, I entered on a 15-second inefficiency in here, and then ran up very expediently upon open, and then it stopped just short of my target. So it baited these targets. I was 10 ticks shy of targets. So that's why I labeled this one, well, trading psychology for prop firms, and then also the video's titled Front Run Your Exits because is if your extra 10 ticks, like is being perfect really worth going from a winning trade to break even or a losing day and then having a red day? That's why when you see these, what I should have done, in hindsight, is front run the first of the equal highs, right? In expectation, just in case these get baited, and then we chop out and go lower for lower premium, um, for lower price arrays, specifically in the 15-minute. So I was in here. It quickly um, and sharply went towards my targets and then stopped. And then I sat through all this. It's like, oh man, this is terrible. And then I got stopped at even. All right. Then I saw it came down here. We left this low. So I re-entered again. And then we got stopped at even again. So no dice today. And we ended up, I mean, look at this nonsense. Coming up here, taking highs, but also leaving more equal highs. I mean, kind of indicative of, let's go here. Do we have CPI? Yeah, we got PPI and CPI this week into unemployment claims and GDP. So not the most optimal week. I think we'll have better price action starting next Monday. That should be the 15th, I believe. Yep, on the 15th. So trading plan for the coming week is, let's look at Friday. Yeah, this should be a good week. We got an 8:30 news driver on Thursday, FOMC. So Monday, Tuesday will be go, will be green light, and then Thursday, Friday will be green light. Tuesday I'll be light in anticipation for there to be an accumulation range for FOMC to knock out, or I'll wait for the 30 minutes after FOMC to start looking for anything. But I mean, look at this. We'll zoom out to the 15-minute. So I had three areas highlighted on this chart on the 15-minute. My points of interest. There were one, two. And this is kind of how I ladder these time frames. That way I can zoom in and reference 15-minute point of interest on the 1 minute or the 5 minute, or reference a 4 hour or a daily point of interest on lower time frames and to get precision entries. So check out what happened here. We ended up, since we were in a premium, we baited these highs, which are still baited. It might go for that in 15 minutes here for the PM session. 1:30 to 2 o'clock could be a window. Look at how it flipped this point of interest. Now my eyes would be on this wick. But we baited the highs, the equal highs that were super obvious. And since in this range, see how the setups that I was playing were above fair value? So I was playing longs in a premium. So that's why I had super tight risk, super aggressive moving stops to even, because longs are less likely to play out in a premium, and they're more favored in a discount. So even if we extend this range to here to this swing low, here's our fair value, 23,770. Institutional order flow entry drill on this discount 15-minute point of interest, which is also in this leg. So I'm looking at right here from Sunday open that made this the low, which could be the low of the week on NASDAQ, to this range Sunday at 8 p.m. So we have one 15-minute gap, which is our breakaway, and then a second 15-minute gap, which gave us institutional order flow entry drill before higher prices into Monday in the 10 to 11 o'clock hour. So when we saw this move, right after open at 9:30. So yeah, 9:30, dip down. There's your play. I didn't play this because there's no news drivers. But regardless, now check what we did again. We came back into a premium, and we're going to higher prices. So let's aside from these these plays in this price action this week, I want to go over matching trading psychology with prop firms. If you are here because you want to be able to day trade and you are likely aware of prop firms and the opportunity they present to risk minimize your risk and maximize your potential um, payouts and paydays, because there's no better way to manage risk than to spend 150 bucks on a 50K account that, with time and patience and lots of discipline, you can turn into a funded account, then get past the threshold and take $1,000 payout, right? So it's a good way to get a lot of experience and practice patience in order to get your way to payouts. So I'll just talk about three different companies today. We'll talk about PopStep X specifically, Take Profit Trader, and let's talk about Apex because because I don't like them. So these are three in order of my personal preference. Um, right now I'm trading a TopStep X funded account, and there's a very specific reason for that. The the options on TopStep X that attract me the most are twofold. One, evals are cheap and you only pay for activation fees, like pay your full price for an account once you pass your activation. So it's $50 activation, 150, $50 eval, $150 activation. So you can get a 50K for 200. take profit with their 40% discount. I think you can get a 50K for like 120 maybe with the discount. And then Apex is definitely a lot different. Um, I don't even know what their prices are, but it's the cheapest, but it also has the thickest, most annoying rule set in the space. Okay, they're ridiculously annoying. And to have to submit your trading videos to get approvals and live trailing drawdown. So if you were to play something that went like if you're a set it and forget it kind of trader that entered here before open and you go here and then move your stop to even and then it comes 10 ticks short and then stops you at break even. Instead of it being a break even day, you're technically in the negative because you had X, 250 bucks in unrealized profits that now can't count against you. So for set and forget longer term type traders, Apex is the worst. If you like copy trading and scalping inside of 2 minutes, 5 minutes, hitting base hits and being done, 10-minute work days, then maybe they're better for you. I like take profit because of the same day payouts. And also you don't have to have 5 trading days in order to pass an eval. So you can go and there's only a 50% rule. So if you got to make 3K on a $50,000 account, you can do, 1200, 1200 and 400 and 12, 600 or whatever and pass it in 2 or 3 days. Um, but psychology wise, for something like this where you can get same day payouts, I have struggled the most with getting to funded. So once we get to the funded stage, I actually prefer Top Step for the sole reason that I can set a very low hanging fruit objective. So right now, their one winning day on Top Step is 150 bucks. So you can hit 150 bucks. You have a lockout feature, so you can lock yourself out to enforce discipline. So you don't have to you can sit there and you can study and you can not be tempted to press the buttons anywhere in here after you either win or lose for the day. And you can really practice honing discipline with Top Step, with the lockout feature, which is awesome, especially for new traders if you're trying to practice skills that will get you far. Also, TopStep X is its own trading platform. So while you can link with Tradeovate and TradingView to trade directly through TradingView on Take Profit and Apex, you don't have to pay for live market data with TopStep X because they are their own all-encompassing trading platform. So I can go here and um, I can set a preference like bracketed limit orders, right? So I can say every time if I use my hotkeys and I can press S, S for sell, B for buy, whatever, I can use hotkeys. And as soon as I do that, whether it's with 1 micro or 10 micros, I can set the brackets to be like, okay, set a bracketed risk reward of 100, 100, 300. So I can bracket my risk reward immediately as soon as I market enter. Uh, or even I can put a limit order on the chart, and as soon as that limit order fills, the brackets will pop up from the position, and I'll have a $100 stop loss, $300 take profit, and then I can edit those in accordance with my targets on the chart, which is pretty awesome. And then you can set it to auto lock you out. So say if you've got a 50K, that means you have 2,000 and wiggle room and drawdown. So like, okay, I want to be able to take at least 20 trades. So that means my my personal daily loss limit I can set to be 150 bucks or 100 bucks. if I want a 20 trade allowance, right? And you can play with micros and be really disciplined, really patient. Um, so you can actually build up working capital to get to the point where, all right, now I've got 2K, I'm past like the 2K threshold. You know, you've got 2K in your account, and then you can scale up and change this to like 200 or 400 or whatever you want. It's highly customizable to your personality, right? So it's there's a lot of options, and this is why I'm trading funded accounts with Top Step X right now. Um, and Take Profit Trader, I'm telling you, as soon as I've gotten uh, funded accounts with them, my equity curve, like I'll be doing this, right? And here's my, 5, 6 winning days, and then I hit my profit target on the eval. And then whenever I have I go to live, I'm like, okay, same day payouts, let's go. Let's get a $2,000 trade in one day. My equity curve looks like this, and it goes straight to zero. So like psychology wise, cool, same day payouts are cool, but also it's all, if you're not super disciplined, it can be a gimmick in itself. And yeah, you can get caught up looking for that same day payout, lose sight of the fact that once you activate your account, you you realize there's no monthly fees after you activate your account, right? So you don't need a same day payout. You can go 20 trading days, $100 a day to get your payout, right? You don't need to make 2 grand in one day. So psychology wise, that's been my personal trip up with same day payouts versus with a lockout system, low hanging fruit, base hits. I'm having much better luck. I'm having much better disciplined performance with something where I can enforce discipline versus uh, have to rely on it with something like Take Profit, plus the bracketed and the features, and it doesn't lag as much as TradingView and all this stuff. But yeah, any you guys trading um, any prop accounts right now? Are you guys studying? Do you have no idea what a prop firm is? Well, where's everyone at in the chat? We might be an audience of me, myself, and I. I'm just gonna keep going. So let's see this. If I were to play the PM session, which is at 1:30, now mind you, I've got the D up here. I'm not. I'm using Take Profit, so I'm not paying for data and TradingView right now. That means this is 10 minutes delayed. But what I'd be looking for is a play inside of this range below fair value from this swing low to this swing high in the time window of 1:30 to 2 o'clock. I would want an entry. So I just delineated uh, this range. I've highlighted the 15-minute wick, and now I zoomed into the 1 minute. So there's 2 points of entry that I would consider taking. Right, you can see we're making a bull flag that ideally, based on narrative, you want everyone here to start longing the bull flag. It's going to come into a discount, stop out the bull flag, and then go to targets up here at the red line we've drawn, these equal highs. So anything below fair value is a fair entry. Option 1. Option 2. I like discounts, so I like option two better. Or if it were to tag like the bottom of this wick right here on the 15-minute order block at 23,819, that would be a fair play, and the play would look like this. Stop below the wick, target equal highs. There's your 2.8 risk reward, entering at the 70% retracement of this impulse from 1250 to 110. So that's your post New York lunch macro, 1250 to 110. This is when it moved. Now we're looking at this range to be retraced into. The chasers get wrecked. Okay, awesome, Clint. Yeah, shoot any questions you have in the chat if you want, Clinton, and let me know. So there's a theoretical play, and once again when we go to psychology, I've traded all the funded accounts that I've talked about, from Apex to Take Profit to Top Step, and this time I spent trading Apex made me lean towards scalping, as a play or as a trading style. So I personally have a 5 minute attention span, and if I can have a 5 minute workday, be in and out and done, that's my sweet spot. I I get antsy, I get bored, I get tired of waiting if it's longer than 30 minutes that I have to sit into a trade. And if I'm going to sit in a trade longer than 30 minutes, I would like to find an entry. So let's look at something like this. 10:43 a.m. We get a dig into this 15-minute discounted PD array, institutional order flow entry drill. See this swing high right here? That gets broken, and we get a money printer market structure shift on the lower time frames. So if I were to play something looking for 1050, the 1050 macro, so entering on this candlestick, entry would be on the 1 minute order block right here. If I'm going to do something in which I would trade for longer than 30 minutes or an hour, ideally, I would like to see a strong impulse in my favor, proving that my direction is right within 10 minutes. So like this, I like to be able to, so like, say if I enter right there, within 10 minutes, I want to be able to move my stop to even, set my targets, front running. So I'm going to aim for this high instead of the equal highs that got baited earlier. So set my targets, front run my exits. See, what is that? 6 to 1 R. So either leave the 6 to 1 R or take risk off the table and take like a partial here. So the risk is risk free. If I'm going to do that, I prefer to do that with an account where I'm not penalized for trailing drawdown. So that means for my style, Apex is 100% off the table. I don't like it. So I'll add, and Take Profit Traders also has, once you get to funded, it's trailing drawdown as well until you hit a certain threshold. So if you're allowed 2K wiggle room in your 50K account, you have to get to a $2,000 account balance before trailing drawdown, um, is mitigated. It's gone. So for example, you still have to be really careful with your 50K funded on TPT. Yeah, 0 to 2K is live trailing, meaning you could go to 51.5K account balance, or 1.5K account balance, and then have a drawdown period that technically takes you back to break even, like, so back to zero. So you're technically a break-even trader, you just had a bad week, right? But then that leaves you with 500 bucks in wiggle room, even though you just gave away profits. So you have to be really, really careful with the challenges that are presented by the rule sets in these funded accounts. Now with take profit or with Top Step, I also believe this is the case. So same thing. Um, if you get your max, like if you get 800 bucks in profit and then you lose 1,000 or you go back to break even, um, that 2K wiggle room is moved up. So it's 800 bucks closer. So it's really, really all about discipline and setting your rule sets and paying yourselves as often and as quickly as possible so that you can stack small wins until you get above the buffer zone, and then you can start playing daily candles and looking for. So let's look what happened here. Whole bunch of junk, a bunch of nonsense for the opening range, the first 30 minutes. We come up here into 10-10, sweep the highs, leave the bait. I mean, honestly, this is where I would have been looking for an entry here at 1020, but here's the caveat. If I'm going to play the opening range, I want an entrance either from open to targets, from 9:50 to 10 o'clock, or from 10 to 10:10 with a time stop at 10:20. So if I had played um, this this two candle bullish engulfing right here at 10:06, I would have wanted this target to get hit by 10:20, and it didn't. Because so there's 10:20, we didn't get anything, and then once 10:30 hits, that's a lag switch, no go till 10:50. All right, if I don't have expectations met by 10:30 a.m. New York time, it's done for the morning session until the next opportunity, which is precisely 10:50, right? And then 10:50 gets you your play to typically either a continuation or a reversal for targets that were baited, just like 9:30. 9:30, the high has still not been taken out, so that's the target for a consolidative range like today. Um, so just one example of having a very specific time and expectation when looking for these plays. So I mean, look what we're doing here. This is baiting a double top. I'm expecting to see it come down here by 150 and then come up here to highs by 210 would be cool, 220 would be fine, or it could even break this range, come back in here until 315 to 345 for the final hour macro. Regardless, it's very important to have a very specific timeline and expectation to set for what you want price to do and when you want it to do it by, so that if it doesn't obey, either way you've got a 20-minute workday and you're out. Because your time here is the most important aspect, and it's also highly, highly important for psychology. And maybe you can fire and forget and hold it and go and do whatever and go outside, hike a mountain, and let things sit for 2 hours. And if they hit, they hit, and if they don't, they don't. But I find my preference is I like quick and expedient action in my direction without any drawdown within 10 minutes. And so that's why I like playing these very specific macros. And then having 10:30 be the uh, the warning of, all right, no trades past 10:30 to 10:50 unless I'm in a bottom already and expecting a full, you know, super bullish 10 a.m. hour. How would I explain a fair value gap? Let's do that. So I'm going to delete some of this. Well, I'll leave this here so we can come back to it later. Let's go over here and explain a fair value gap right here at 2:02 a.m. on Monday. So a fair value gap is a three candlestick pattern. So we're going to look at 2:02 a.m., 2:03, and 2:04. So look at these three candles. This down close, this up close, and this down close. Fair value gap is a three candle pattern where the book ending candles, their wicks do not uh, overlap. So from the bottom of this candle to the top of this candle is a gap that is an inefficiency in price delivery. So why is this inefficient? Let's look here. This candle goes down, offers lower prices, closes. This new candle opens with an inefficiency, offers higher prices, closes. This one opens, goes up and down, and it fills this range. So from here to here, there's no gap, right? And then this one opens, it goes up, goes down. So from this candle to this candle, all prices have been covered, right? Buys and sells have been offered efficiently throughout this range. But then this one closes and opens. This one goes all the way up here without retracing or touching this wick, right? So we have another open. Bearish candle goes up first, then it goes down and closes. So now we have a gap between this wick and this wick. So a fair value gap is a price array that we specifically look for in order to read order flow. And so what does that mean? That means if I'm looking for something that resembles a cup and handle to play, and I want to play my cup and handle in a discount, and I'm looking for price to give me a signature that we're continuing in a certain direction, fair value gap is a way to measure that. So if I were to play this cup and handle here, I would enter in the discount, this blue zone, 70 to 78% retracement of this price leg. I'd be looking to enter here and target the top of the handle. Now, once that happened, what would I want to see? I would want I would want to see a fair value gap afterwards, and then look at how these two candles only trade in the top half of this gap. That's a sign of strength and continuation. So what happens afterwards? We come up here, we chop around, we consolidate, we print a bull flag that ends up paying. So why did this bull flag pay? Because we were in a discounted zone. We get it for a value gap that was respected. So we're measuring that order flow only needed to go and fill this top half of the chasers. So this giant candle that didn't overlap has chasers behind it, people that bought it in FOMO. So we're taking out half of their stop losses in the top half of this gap before propelling us to higher prices. And then look what happened again. We make a little double top, come back down once again. So we tag the midpoint this time, but on a closing basis, these candles still respect the midpoint of this fair value gap. So that's how we're using these gaps between wicks that don't overlap to measure strength of order flow. And then we come up here and continue to higher prices, taking out the previous highs. So, right, so we have low, higher low, lower high, lower low, lower high, lower low, higher high. See that? That that's a market structure shift. So that would be when we look for the discount in this cup and handle after a market structure shift, is when we start making higher highs and then retrace from the impulse that made that higher high. So that's where I pulled that fib. And then after that, and we see price react sharply in our direction, it made a fair value gap. This is our next point of reference. If you didn't buy here, it's a continuation setup. So right here, 4 a.m., it stabs down before consolidating, right? What is this doing? It's making a big old bear flag, inducing shorts. See that? See that bear flag? People are doing that. They're measuring their retail RIC patterns, saying it's going to go lower. We're going to make lower lows. But we've already had a market structure shift. We've already taken out highs over here. And we know to expect the same exact thing because price is fractal and does the same thing every day. Look at that. Here's our blue zone, our buy zone, in a retracement after old highs had been broken. Bang. There's your buy zone. This is your inducing bearish sentiment using a time delay. So it's going nowhere over a period of time in order to collect orders on both sides of the market. And then it takes out the highs, stops out the shorts. Then, what does it do after that? Makes a bull flag. Now everyone's drawing their bull patterns like this. Where are their stop losses? Right below this low. Then they get taken out next. Notice how this fair value gap gets referred to more than once. So we have a high broken, higher low, highs broken, higher low, highs broken, higher low, highs broken, higher low, highs broken. Now, what time did this happen? 9:30 a.m. New York market open. Where did price go before this leg of the run-up? It went to a local fair value gap. Does that make sense? I'll turn my magnet back on so it auto snaps to the bodies of these candles. So if you were to play this continuation play upon market open, it might look like this. You stop below this low, enter on expecting the midway point to be tagged, stopping below the low of the candle that made the fair value gap. So once again, 1, 2, 3. Those are the three candles that make this fair value gap. So when you play a fair value gap and you're expecting it bullishly, you enter in the top half or the midpoint and you put a stop loss below the low. And that would have been the theoretical play targeting. Here's this 930 candle. See this wick? This induced a bunch of longs before stopping them out based on this point of interest. So there's your over your 3-to-1 reward, just aiming for everyone who chased 930 or everyone who thinks it's short now. And there's your play that lasted 1, 2, 3 minutes off open. So that's an example of a gap. Now here's another one. So I'm going to draw this one slightly differently. I want to see if you notice. So instead of drawing it from this wick, I went to here. Why is that? I'm doing Alt J. Wait. Alt J gives you a horizontal line. So you see how this bearish candle closing is different from the opening price of this candle. That's an inefficiency, same thing right here. Those gaps. So when those gaps are included in the candle that makes a fair value gap, you include them when drawing your gap. So that means I'm drawing it from the top of this gap to the bottom of this gap. Check that out. So what happens here? What makes this a fair value gap? That's a point of interest. One, it happens in a time of interest, the time being 11:50 to 10:10. This is a 20-minute macro window. So what happens in this time is important. This, we're going to go with another a three candle pattern. This is a swing high. When you have one candle that is higher than the two candles next to it, that's a swing high. When you have the opposite, candle that's lower than the two candles next to it, that's a swing low. For example, turn my magnet off. That's a swing low. That's a swing low. That's a swing low. Okay. Swing highs. That's a swing high. That's a swing high. That's a swing high. That's a swing high. Why am I highlighting these? Magnet back on. This is a swing low that I just highlighted, right? When swing highs or swing lows get taken out, that signals the potential for a shift in market structure. So when we combine this with other things being a 20-minute, very specific time window, and a fair value gap, I highlighted this one red because it's bearish, I'm looking for a short-term reversal in price. So what happens here? By 10:10, the candles are closing below this midpoint. In this fair value gap after we take out a local swing low. So this signals a bearish shift in market structure, at least locally. We return into the point of interest, this fair value gap, and then we do what? We take out the next set of lows. So a potential scalp play here looks like this. Stop loss is magnetized to the top of the wick that created the fair value gap. And then I'm targeting lows right there. And there's your 3 to 1 R. And now remember how I said very specifically in the other example from today, if I'm playing something in this macro from 9:50 to 10:10, or if I'm entering something at 10:10, I want targets to be hit by 10:20. Targets got hit at 10:19. So there's your 3 to 1 scalp play based on a fair value gap on market structure shift in a very specific window of time. Right there. With a 10-minute expectancy. Means you don't negotiate with price. You say, I want it to go here, I want it to go here by this time, and if it doesn't, I'm out. And that's how you create a very specific set of rules to look for a play. And then it either works or it doesn't. And you either win or you lose, and then you're done for the day. And that's an example of a 10-minute workday. And look what happened. You can be in the wrong direction of price, and it can go and make newer highs, but you can still find a play in the side of the retracement. So let me know if that makes any sense. But then look what happened after that. We bottom out 1022, Here's 10:30, and once 10:30 hits, what happens? Whole lot of garbage. I'm gonna magnetize this this to here. So 10:30. 10:30 to noon, the lunch hour. What happens? Whole lot of BS. No distinct price runs, no easy setups. Flag switch. This is accumulating a very big, obvious bull flag. Then it goes down, it stops out the bull flag, makes a lower high, turns around, and takes out the lows again. What time does it take out the lows? 12:30. 20. Here's 1:30. That 1:30 to 2 o'clock window goes here, takes out the lows again before reversing, and then taking out the lows again, waiting for that other time window I mentioned was 3:30 to 3:50, 3:45. The 3:50 candle's dangerous, but that's for another day. Um, so yeah, that's kind of a little bit that I wanted to cover. Um, and those are like the three basic principles, at least in how I look at the markets. Fair value gaps, swing lows, swing highs, and very specific windows of time. And of course, knowing what retail traders are looking at with their chart patterns and counter trading them. Because for every winning trade, there's a loser on the other side of it. And if you want to identify where the money is in the market, identify the group of people that are most likely to lose, and then position yourself to match their orders profitably. And then now I drew a cup and handle retail pattern right here. So why did that work and the others didn't? That's because that pattern is in a discount. So these retail patterns have a higher likelihood of playing out when you play bullish patterns at a discount and bearish patterns in a premium. Here's an example. So, yeah. See this bear flag? The bear flag played out because it was in a premium. And most people were grasping at straws, trying to say this is some expanding bull pennant garbage, when in reality, we took lows, we made lower highs locally, and then played the bear flag. And then it went down to the fair value gap we highlighted, once again showed us on a closing basis, respect of the top half, making our lower high, or higher low. So this low was protected. It did not get broken. We went here. We took this high, made a shift in market structure, retraced where? Into another fair value gap, which was then used to catapult us upward into the pre-market. So the bear flag played into stop losses, shifted market structure. Then we had a bull flag that paid because we were in a discount and we'd already taken out stop losses and respected the higher low in the trend. So let me know if that makes sense, guys. I might cut it off here soon. So just kind of time, price, fair value gaps, market structure, order flow, and counter trading retail. And then Plus, like I showed you I played this, missed it by that much, and took the L today because I didn't front run my exits. So we'll hit it again tomorrow. I will be using Forex Factory to navigate high impact news. Like at 9:45, I will be watching out for this. Either I want to be positioned before 9:45 and use the news driver to catapult into my targets, or I'm going to be waiting for it to hunt stop losses already in the market, and then after that, make a play. But I will also be, oh no, wait, is that next week? Here we go, sorry. Yeah, green light on open tomorrow. So we got 8:30 news. I'll look for stop losses on either the highs or lows of 8:30 tomorrow morning, New York time, and then be looking for a play from 9:30 to 10:20 max. And yeah, any shoot any questions in the chat. Otherwise, I'm gonna wrap it up here. But thank you for joining. And yeah, I linked my Discord in the description. If you want to hang out, ask more questions. Uh, we're going to be tearing up the markets here soon. Uh, once we get into Q4 and things get more exciting. So yeah, that is about it for today, guys.